Okay, good evening once again. Um, this is Sunday evening, the 11th, the 11th of January. So, let's just quickly analyze this as well. This is for this week. We're gonna look at volatility 151S index. So, this is our weekly profiling as well, and then at the end of the week, we'll come and say again what the trade did, if it acted to our expectation or not, just like we did to VIX 50, what it did and the opportunities we met and all that. So this is VIX 15 1S. So now in the monthly time frame, we can see that it is bearish, overall bearish. So as we move down the time frames, we will know when to buy or when to sell. But overall, it is bearish from the monthly time frame. So now we move down. Okay, this is the weekly time frame. And now from the weekly time frame, what can we see? We can see that it is still bearish. And then I have mapped out this other block here. Up up close candles before the move downwards. So this happens to be a supply zone. So when price reaches here, we expect it to do what? To come down. So that's why this place is mapped out. And this blue line stands for liquidity. That's one of the legs of this candle the wicks have also taken before it came down. So this happens to be a demand zone. Whenever price gets there, we expect price to come down. So now for this 1, 2, 3, 4 weeks, price has been coming down impulsively. So and now this is a new the last week candle that went bullish. So now this is this week candle. If you can remember what we said that whenever we are expecting a bearish week, the first thing we need to see is that the candle should start by going bullish for manipulation purposes. And also, whenever we expect a bullish week, it should first of all go bearish. So for this week, I'm expecting bullish from volatility 151S index, and now it is going bearish already. So it means that we are on track. Okay, now let's move down to a lower time frame as well, as I still explain why I'm expecting a bullish move when the candle is still moving down. Okay, weekly time frame. Now this is the daily time frame. Okay, so transposing what we met in the weekly time frame, here is it. This is the other block from there. So we expect this price to move to that other block. Okay, it cannot as well. So all we are doing is to um to work based on informations we have and the skill sets as well. So what price does is actually to move from one point to another, from a liquidity zone to a liquidity zone, or a demand zone and supply zone. I'll explain all that later. But for now, we saw that price went up. Okay, let me first of all just remove this so that you can see. Save changes, please. Sorry for that. There's, you've seen I'm also using a Doom account. When I use my live account, I will let you know that I'm using my live account as well. I'm being transparent here. Okay, so this structure now broke this first structure, right? Came out because this is a high, this is a low, this is another high, this is a low. So it came out and broke this structure impulsively with 1, 2, 3 good days candle. And then throughout that week, as it came down, it still went up high. Okay, it went up high and stopped somewhere here. Okay, before coming down. So what am I trying to say? I'm trying to say that we are in a semi bullish move already. Okay, now this candle came down, reacted from this other block. This is another block, and then went back. Okay, so this is another block, and now this now has formed another block as well. That was why I removed that first candle. Let me, okay, it will be present in the, okay. So this becomes another block. This now from here, all this down close candle before this move up that has broken this structure as well has become an up close candle. It's an up close candle. So a down close candle, sorry. So it has become another block because it happened in a key strategic point, which is a point where it reacted from another block before going up as well. So we mapped it out as an order block. We want price to react from there and start going back up. Now we are moving to from the daily time frame now to the um, 4 hour time frame. Now this is where it gets very juicy. When I mean juicy, I mean juicy. Now what are we experiencing and expecting to happen here? Okay, let me just show you one of the things I did first. One of the things I did was to pick this tool. It's called the Fibonacci tool. I picked the Fibonacci tool, took my Fib measurement. Now the Fib measurement will actually, in everything there is measurement. Every profession there is a measurement. There's a measurement scheme or tool. Okay. Now this Fib measurement will actually help to measure the retracement level of the leg before it moves back up. So from here to here is called a range or a price leg. Okay. And since we are anticipating a move higher, now we have to measure at what range do we expect this price to reach before it starts going high. So 50, this is 50. This 50 is called equilibrium point. Okay, so we need it to go below 50 so before we can take our entry. So and this below 50 is around the 61.8, and this is where our other block again falls into. So you can now see the reason why we are choosing this other block rather than choosing this other one now, because there are two other blocks here. This is another block, a down close candle before this went out and formed another other block and went down. So this is another block, this is another block. But the reason why we chose this is because it is below, using this price leg to this point. So that was why we chose that. And gradually price is dropping down there. So what we expect now is that this is a high probability order block because it will take out this liquidity and this other liquidity as well. And then when it reacts from there, we take it higher from there. So we expect it to answer to us when it gets to that point. So, but if it moves from there, we don't expect it to take this high before it comes back down. Okay, so we're just monitoring everything. Today is Sunday. Let's see whether before Tuesday, whether it to give us an entry. It gives us an entry on Monday. We see tickets. Okay, so moving down to um, moving down to 1 hour time frame. This is the point at 1 hour time frame. It's at this point I stop. Okay, what's this one that's still showing? Please, we want to see you at 1 hour time frame. Okay, so this is it. So this is the one that's above me from the daily. So when this has gone up, so we need all this, at least this, to break, and then from here we take our entry and then know where we are taking it to. So that is all for volatility 151x for this week. That's what we look at, and then any other trades we take depending on how it forms and everything, we'll record it and then present it as well. But the main reason for this um, VIX 50 for the entry is because of the order block we are seeing here. It's a high probability order block. It will sweep liquidity and our move is upward. So expect price to react from this down and then take us over. Anyhow it is, we'll record it. Peace.